Okay, so this video follows the video where I show the closing process for net income. The difference in this video is it's going to show what happens when you are in a net loss situation and how that changes what happens to capital. So the closing process is when you get your account balances down to zero to start the period back over. So I have a picture of the scoreboard because it's just like starting a football game back over. You zero out the score so that you can keep track of the next game. We're going to keep track of the next accounting period. And so I have an adjusted trial balance here, and in yellow are the accounts that we call temporary. This means that we close these accounts. They are temporary because they start back over each period. The other accounts that are listed are considered permanent because they don't start back over. We keep their account balances going. So close revenues and expenses to capital is our first step. So we want to close our revenue account. So we're going to look for our revenue accounts, and we have two. We have fees earned. So I want to close it. That means I want to get the balance to be zero. So if it has a credit balance, I want to debit fees earned. I also want to close interest revenue. If it has a credit balance of $2,000, I need to debit it to get its balance to zero. Then I want to close my expenses. So salary expense has a debit of $5,000. So to close it, I need to credit it for $5,000. And rent expense has a debit of $4,000. So I want to close it by doing the opposite, which is a credit $4,000. Now I'm at the step where I need to close my revenues and expenses to capital. That means I need to transfer the amounts in these revenues and expenses to capital. So if I look and see what I have in fees earned and interest revenue, it's $7,000. And my total expenses right now are $9,000. So I can see that I'm in a net loss situation because I have more expenses than I have income. So I have a net loss of $2,000. So when I go to close this to capital, I need to debit capital. And you know how we're always supposed to list out our debits first? So I actually need a new line right here. So I'm going to add in a new line because I need to debit it. Insert. All right. So I need to debit capital for $2,000. That is going to transfer my net loss to my capital account. Before I move on, I always want to make sure that my debits equal my credits. So if I add up my debits, they equal 9,000. If I add up my credits, they equal 9,000. So I'm good with my step number one. All right, step number two says close drawings to capital. So drawings has a normal debit balance, so it has $1,000 in it. So I need to credit drawing to get that balance down to zero. And then I'm going to close that to capital, which is also going to reduce capital. And so I'm going to debit capital for $1,000. So let's look and just see what's happened to our capital account during this closing process. So my capital account can always be looked at in a T format. So I'm going to draw a T right here. I'm going to call it capital. The beginning balance of it was $160,000. During my closing process, I reduced it right here for $2,000. That was my net loss. Then I reduced it again for my drawing of $1,000. So during this period, it just went down by the $3,000. So my new balance is going to be the $160 that I started with minus the two subtractions. So now I have $157,000. So if I want to look at my final trial balance, my post-closing trial balance, here's what I'm going to do, okay? So first of all, I'm going to change this to say post-closing trial balance, then I'm going to update it. My new capital balance is now $157. I have zeroed out each of these accounts. So I can get rid of them because I don't have to list out accounts that have zero balances. So my new post-closing trial balance is just made up of my permanent accounts plus my new updated capital account.